The cost of education beyond higher school has gone up significantly, said Biden. An entire generation is now saddled with unsustainable debt in exchange for an attempt, at least, at a college degree. The burden is so heavy that even if you graduate, you may not have access to the middle-class life that the college degree once provided. Welcome back to CreditWise, better credit the wise way. In this video, we'll talk about how you can get a $20,000 student loan debt forgiven. We will also talk about the announcement of Biden, federal financial aid, and what other things you can do as finance advice on your student loans. There were some big announcements made by Biden about student loans this August. The first was that they're putting a hold on payments until December the 31st, 2022. So you won't have to pay again until January the 1st of 2023. The biggest news was that borrowers who make less than $125,000 a year will have $10,000 of their debt forgiven. Biden made it clear that this is the last time the payment pause will be extended. The payment pause started in March 2020 when Trump was in office. The pause was supposed to end on August 31st. The president has never done anything like this before, and it will be the first time in American history that a large amount of debt will be forgiven. Most people are happy with the plan, including well-known Democrats and civil rights groups that had asked Biden to wipe out more than $10,000 in student debt. So what is this $10,000 to $20,000 debt forgiveness? Well, let's get into it. $10,000 in federal student loan debts are not private loans. The loan forgiven is for every borrower who makes less than $125,000 a year, and up to $10,000 per person for a married couple making up to $250,000 a year. This is a big deal for people who are close to that $10,000, and it could be a game changer. You will be able to pay off your student loans much faster. Even people who owe a lot more than you are a little bit closer to having their loans forgiven. This is especially true if you get the Pell Grant or have gotten the Pell Grant in the past. If you got a Pell Grant, you might be able to get up to $20,000 off your student loans instead of just $10,000. Both amounts have income limits for who can get them. If you're $125,000 for an individual and $250,000 for a family, you can apply. For those who don't know what the Pell Grant is, it's extra financial aid for people with very low incomes. Pell Grants are government subsidies that help low-income and middle-income students pay for college. Pell Grants don't usually have to be paid back like student loans do. There's a good chance that you got one as part of your financial aid package while you were in college. Of the estimated 43 million borrowers who have benefited from the administration's forgiveness plan, more than 60% got Pell Grants. According to the administration, many people don't know that this is possible, which is why an estimated 8 million borrowers would see an automatic reduction or elimination of their student loan debt because of this. You can check your account at studentaid.gov to see if you've got a Pell Grant as part of your financial aid package if you're not sure. How do Pell Grants get given out? First, you fill out the FAFSA, which is a form you have to fill out every year if you want to be considered for financial aid. This determines your tuition cost, how much you pay to go to school, how much money you and your family can reasonably pay toward your education. These things are used to figure out if you can get a Pell Grant and, if so, how much you can get. Before, Pell Grants were between $650 and almost $6,500 per year. But a spending bill that was just passed made the biggest change to Pell Grants in more than a decade. Not everything is clear yet, but some people will be able to do it automatically. There might still be some problems or it may still be challenged in court. Between August and December, they should be able to figure these things out. The forgiveness is expected to help 95% of federal borrowers. Borrowers whose federal student loans went into default before March 2020, when the pandemic started, will have their loans marked as current. If you haven't paid your student loans by 2020, they will be up to date. So it will be like you have a clean slate to start over with credit reporting agencies. You can start making payments again in January, which should help your credit score as well. Let's look at those government grants and find out who is eligible for federal grants and how to get them. It's important to remember that the federal government doesn't give people grants or free money to start businesses or pay for personal costs. The government has federal benefit programs to help people with their money. These programs help people become self-sufficient financially or cut their costs so they can become self-sufficient. When you look at grants on grant.gov, you'll see that there are actually a lot of them. Different agencies have given orders. There are about 12 different organizations that all have different grants and need help to reach their goals. For their agency to reach its goals, they need regular people like us to come in, start businesses, and offer services to the government. The government will pay you for these services and you can make profit from them. This is basically how grants work. Agencies need you get money, you make money with that money, and you win. This is what the saying grant money or free money means because you don't have to pay it back. You're giving a service to a government agency, and that agency wants to take care of you. To pay off student loans quickly, you need a smart, well thought out plan. And here are some tips to get the dice rolling. Number 1. Make bi-weekly payments. Most people only pay their student loans once a month. But if you pay your student loans every 2 weeks, you'll make an extra payment over the course of the year. Say you divide your monthly student loan payments by 2 and pay that amount every 2 weeks. If you make a half payment every 2 weeks, you'll have made 26 payments by the end of the year. This is the same as making 13 full payments each year. If you pay once a month, you will only have paid 12 times a year. If you make payments every 2 weeks on a 10-year loan, you could save more than $650 in interest and pay it off a year early. Number 2, pay more than the minimum. Paying more than the minimum each month is the most obvious way to pay off your student loan early. Unfortunately, it's not always as easy as it sounds to make extra payments. Each loan servicer has their own way of dealing with extra payments. Some lenders may put your extra money towards interest, while others may put it toward your next month's payment. But it might make more sense to put the extra money toward the principal balance of your loan or the loan with the highest interest rate. Number 3, think about your payment plan. You can switch to a short repayment term, but the monthly payments will usually be higher if you have less time to pay back the loan. Before you switch, make sure you can pay the new amount. Borrowers with federal loans can choose from different ways to pay back their debt. Sign in to your Student Federal Aid account or FSA to see what plan you're currently enrolled in. The 10-year standard or graduated plan is the shortest way to pay back a loan. Number 4, use windfalls. Unexpected money comes in the form of tax refunds, inheritances, and work bonuses. A windfall is when you get a lot of money that you didn't expect. If you get a windfall, you can choose how much of it to put toward your loans. How much you choose depends on what else you want to do or spend money on. Cover your immediate needs first, or if you need to, think about adding to your emergency fund. You can make an extra payment on your student loans with any money you have left over. Number 5, research refinancing options. If you have high-interest student loans, you might be able to pay them off faster if you refinance. When you refinance your student loans, you switch to a new lender who has better terms or a lower interest rate. Refinancing has a downside, especially if you have federal loans. When you refinance federal loans, they become private loans and lose all the benefits that come with federal loans, like income-based repayment plans, longer deferments and forbearance periods, and loan forgiveness programs like the one mentioned in this video. If this video helped out, click the like button. It helps with the algorithm. For more credits and finance advice, subscribe today. From CreditsWise, we'll see you in the next video.